Well, bankers said 2025 would be a stellar year for mergers and acquisitions, known as M&As, and meanwhile, under the Trump administration, instead, it is moving in the opposite direction. M&A deal signings plummeted after Donald Trump's tariff announcements last month, falling to the lowest levels in 2 decades. And this is having far-reaching consequences beyond U.S. markets. The market value of global M&As fell more than 50% last month compared to March. Nearly half of that was in the United States. One sector that bucked the downward trend was technology. That accounted for nearly 40% of deals signed this year, and that is likely due to its reliance on intangible assets such as IP and software, less affected by those punishing tariffs. Okay, for more on what this decline means, we're joined by Nicholas Economides. Nicholas is a professor of economics at New York University. Welcome back. Good to see you again.
Good to see you.
Okay, global M&A activity dropped to its lowest level in more than 2 decades. What's driving this sudden freeze in deal making? Kind of put it in context for us.
Well, I think the introduction of tariffs creates a lot of uncertainty, has created a lot of uncertainty, both before and after the beginning of April. And the actual valuation, how much are the companies worth, has fluctuated a lot during April. It went way down, and then by now it's almost recovered. So when people do a merger or an acquisition, they need to value a company. And if the value of the whole stock market goes up and down dramatically, then it's hard to value the company correctly. So that has created a pause. You know, most people don't need a company in the next 5 minutes. They don't need to acquire it in the next 5 minutes. They can wait for a month or 2. And I think that's what we're observing.
Kind of broaden that a bit, if you will. Talk about some of the frustrations, because Donald Trump was supposed to come in, be the business-friendly president. Certainly hopes were up for more M&As, a shot in the arm for not just the U.S. economy, the global economy. What does it mean that so much of this is on hold? Because as you said, people want to see where this is going before they decide to put a toe in the water for mergers and acquisitions.
Absolutely. I think well, the Trump administration has not been very good in selling its tariffs agenda. Tariffs agenda has been confusing. Some of it was, well, we're going to negotiate pretty quickly and see what happens, and we're going to be better off after a few weeks. Another stream of thought was, well, we're going to make sure that factories are located in the United States, and we're going to make money off the tariffs. Now, these last two require tariffs to be there for a long time, and that's quite different than the short negotiation of the first one that I described. So what we are seeing there is that most of the world, including the United States investors, were confused about the impact of tariffs. Is it going to be something really short-term, or is it going to be something long-term? And because of that, it created this significant uncertainty, and people put acquisitions and even investment on pause.
Yeah, and it didn't help. Donald Trump would periodically say things such as, we're going to have short-term pain, there's going to be economic pain, we may have a recession. But let's talk about the tech sector, because that appears to be the rare bright spot with somewhat strong deal activity continuing. Let's talk more about what is shielding tech from the broader M&A freeze.
Well, part of it is that a lot of the value is in non-tradables like IP, software, and so on. Part of it is also that there is so much value in technology that even if you make a mistake in the actual valuation, it still might be a very good deal anyway. So that might be driving these acquisitions. Also, for top-of-the-line innovative companies, new companies, there is a lot of demand, and there is a lot of competition by many different suitors to buy them. So that might also have might also mean that there is no time to spare and that's why these measures went forward.
And Trump has also been sparring with the Fed, especially Jerome Powell, the Fed chief. This added uncertainty certainly is having its impact on investor confidence as well.
Yeah, I think that the Trump administration is doing this more openly than previous administrations. But in my experience, all administrations were pushing the Fed to cut interest rates, but they were doing it not so openly. And of course, an open statement that puts down Mr. Powell is something that's not good for the U.S. economy.
Yeah. Okay. Let's. One final question. What would happen? What does the United States need? What does the Trump administration need to happen to restore long-term confidence and restart the deal pipeline? Because obviously, this was supposed to be a big year, and that's certainly something that could bolster the economy and give consumers some hope if it went well.
Well, I think that it has started already in the sense that I see that the Trump administration in the last few weeks has been talking only about negotiations, about tariffs as a negotiation tool, rather than tariffs as a way to move companies in the United States or to raise money. So once you converge to that point of view, it's a negotiating tool, and you start having significant deals, like the deal between the United States and China, even though it's a preliminary deal, and similarly the deal between the UK and the United States. Once you start having them, and if there is momentum, if there are a number of other countries or block of countries that sign agreements with the United States, then we are getting, in the next 3 months, 4 months, out of this phase. And then one expects that the traditional Republican points of view of less regulation and less taxes are going to come through in the laws that the Republican-held Congress are going to pass probably at the end of the summer.